Hi, I'm Zach Fallon. I'm the CEO and founder of Sō.Capital. I'm also a securities attorney and principal at the law firm Quetzal. Those of you who are in the capital raising space or who may not be in the capital raising space may have seen that the SEC adopted rules this week which continue to harmonize and increase the utility of the exempt offering space. I thought it was a super exciting development. Kudos to the staff and to the commission for getting those rules out. I wanted to give a quick overview on three high-level takeaways from my perspective that I thought were interesting. There's tons of stuff in there, lots more than just what I'll mention here, but these are three things I thought were kind of important. First, I think you're going to see a gradual increase in the use of Rule 506C as a regulatory vehicle to raise capital. The reason for this is that the Commission adopted rules which make it easier to rely on accredited investor verification status on an ongoing basis in follow-on offerings. This was a sticking point that market participants had told the Commission about over the years as one of the reasons why people were not relying on Rule 506C. Some people say that's not the real reason, but incrementally, I think it may make a little bit of a difference, and so ultimately, we'll see what happens. The second thing is, I think you're going to see a gradual increase in the use of Regulation CF as a capital raising vehicle. And this is a twofold reason, basically. One is they increased the limit from $1.07 million annually to $5 million annually, and they removed the accredited investor investment limits in Regulation CF offerings. Now, what the effect of that I think would be, or could be, is that you'll see, instead of having these side-by-side offerings of Rule 506C and Regulation CF and housing the accredited investors on one side and the retail investors on the other, I think you're going to see a combination of those two for administrative reasons and for regulatory reasons, frankly, to just put them all into a Reg CF vehicle and raise over $1 million. So whether or not it's a total increase in the amount of capital an issuer is going to raise, I don't know. But I think you'll see that Regulation CF is going to have higher numbers as a result because those accredited investors may be moved into the Reg CF vehicle. Could be wrong. That's a thought. Lastly, and this is really important for me, communication. The bedrock of any healthy relationship is communication. And I was so excited to see the Commission adopt rules this week that facilitate greater communication between founders, small businesses, entrepreneurs, and prospective investors in the capital raising process. As you begin to test the waters and to gauge interest, that's a very important thing that startups need to do in order to tell if there's any interest in the offering, their contemplated raise, and if so, who is that interest? Who expressed that interest? So they can communicate with them in the capital raising process and potentially raise money from them. This is important because not everyone has access to seasoned investors, professional investors. In fact, the vast majority of companies across the country do not have access. The private markets are exclusionary by design. And to date, if you wanted to communicate broadly with potential investors, you had to sell to a very limited set of investors, accredited investors. Now you'll be able to communicate broadly and potentially sell to retail, and that's a good thing, backstopped by anti-fraud provisions and disclosures at the time of sale. So I was excited to see that. Those are the three things. 506C, maybe increase utility. Reg CF, I think you'll see more use of the exemption. And communication. Thanks for watching.